So you're looking for income and you want to know the difference between a lifetime income benefit rider and what's called annuitization. And annuitization really means creating payments. Now with 10,000 baby boomers retiring every single day, most people are looking for income. Most people are looking for contractual guarantees. They're not looking to trade the markets and be Gordon Gekko. They want to make sure that they have a solid income floor of guaranteed income in combination with their Social Security, in combination with pensions if you're so fortunate, dividend income, rental income, whatever you have coming in every month that guarantees that lifestyle that you want to live. So let's talk about lifetime income benefit riders versus annuitization. Now before we get to that, and we're going to cover a lot, I've written 2 books on the subject. I've written a bunch of books, but these 2 kind of cover what we're talking about today and what you're concerned about and what you need to know the details about. I've written an income rider owner's manual, and it covers all income rider types, how they work, benefits, limitations, etc. And then I have an immediate annuity owner's manual, which is the granddaddy of all annuitization products. So it's going to be a lot of information at the end of this video. I'm going to tell you how you can get those books for free and no cost, no obligation. I guess that's what free means, no cost. But seriously, we're not going to call you and we're not going to bug you. We're going to treat you like a professional, and hopefully we can be your agent of choice when that time comes, or if it doesn't, that's fine too. Okay, so let's talk about income from an annuity, any type, was it an income rider or annuitization. It's a combination of return of principal plus interest, and that lifetime income guarantee is based primarily on your life expectancy, or if it's set up joint with a spouse or somebody, life expectancies, plural, at the time you take the payment. There's a lot of I don't know, the media kind of feeds into this a little bit. There's a lot of talk about rates and timing rates, and the interest rates do play a role in lifetime income guarantees, but it's a secondary role. The primary pricing mechanism, what drives the train, is life expectancy. Just remember that, because you can't time it. Now, let's talk about annuitization, because annuitization, the creation of payments, that's what that means, started in the Roman times. That's when immediate annuities were actually first introduced, and those are the granddaddy of all annuitization products. Again, return of principal plus interest based on your life expectancy. And the value proposition is the annuity company is going to pay you for the rest of your life, regardless of how long you live. You lived to 150, they're going to pay you to 150. And they're going to continue to pay you, and even if there's 0 in the account. So let's talk about annuitization from the standpoint of the taxation. And I'm no tax advisor, but I'm going to give you the broad overview of how this works. All annuities can be used inside of an IRA, outside of an IRA, inside of a Roth IRA, whatever you choose. It's the contractual guaranteed nature. And those contractual guarantees, based on what account you choose, that's how you're going to be taxed. So let's look at annuitization outside of an IRA, because inside of an IRA, everything that's coming out is fully taxed at ordinary income, right? Nod your head. Okay, now, the immediate annuity outside of an IRA, non-qualified account as they say in the business, return of principal plus interest. So when we send you a quote, there's going to be a column that says, here's your guaranteed monthly amount, here's the amount that's not taxable of that monthly amount, and here's the amount that's taxable. So the amount that's taxable is the interest part. In our business, we call it the exclusion ratio. So until the money's gone, okay, that exclusion ratio is going to be there. So you're only going to pay a portion of the taxes on a portion of that income stream. Now, when the account goes to 0 and you've beaten the insurance company and you've lived past your life expectancy, guess what? Then all of it's then taxable. So let's go over that again. Up until you use up all the money, it's an exclusion ratio, a combination of return of principal plus interest, and you're only paying taxes on the interest portion. Once you get in the annuity company's pockets, for lack of a better phrase, then it's all taxable, but it doesn't really matter because they're on the hook to pay you even if you live to 150, right? Okay, so we've talked about annuitization payments for lifetime income. Let's talk about income rider payments for lifetime income. It's a little A little bit more complex because there's numerous types of income riders. Let's talk about the ones that are not annuitized. There are some attached to variable annuities that can be annuitized. So I know we're getting in the weeds a little bit, and that's the reason you need to get my book, because I do go over those. But the majority of the ones, income riders that are pitched today, are the ones that are not annuitized. And you're saying, well, Stan, how can it be a lifetime income stream if it's not annuitized? A lifetime income benefit rider pays you for life, but in essence, it's a withdrawal, okay? In essence, they're subtracting from the account and just paying you for life, but it is what it is. So it's not a combination, an exclusion ratio like annuitization. When you have the majority of income riders, and again, I'm saying that in a broad stroke, the majority of income riders being sold out there now, when you take income, it's last in, first out accounting, meaning gains first, so that you're going to be paying gains first on that income stream. Now, does it make it better or worse, annuitization versus income rider? No. In my world, it's all about contractual guarantees. I only focus on the will do, not the might do. The will do is the contractual guarantee part. So if you wanted income, and it doesn't matter whether it's now or in the future, we're going to quote all products to see what has the best contractual guarantee. I got a call the other day, and the guy said, hey, I want income in 7 years. I believe it was 7. Yeah, 7 years. I said, great. Okay, we're using, he's an IRA or non-IRA money? He said non-IRA money. Great. Okay, so we quoted all income riders, and we also quoted a deferred income annuity, which is an annuitized product, okay? So when the quotes came back, I sent them to him, and we got on the phone. He set a phone appointment. We got on the phone. And I said, here's the kind of the bottom line, doesn't make one better than the other. With the income rider, all of that income stream from the start is taxed last in, first out, gains first. On the deferred income annuity, a portion of that, because we're using non-IRA assets, is not taxable. So you have to weigh which ones makes more sense to you, time value of money, whatever calculation you want to run. But with non-IRA money, we'll look at both. We'll look at the taxation of the income stream, which is very important, and then you can make a decision which one works. Interestingly enough, what he did is he bought one income rider, split the money, bought one income rider and one deferred income annuity, which is a pretty interesting way to go about it. There's no perfect answers out there, just bad sales pitches. Never forget that. No one has the perfect answer. What we're going to do is show you all the best quotes, give you the best information, and then explain everything, then leave you alone so you can make a good decision. So, where do lifetime income benefit riders and annuitization fit? Hey, it's for income. If you need income, you need lifetime income guarantee. That's the unique benefit proposition that only annuities have, that no other product has. So when you see all these cats on TV and radio or whatever say, I hate annuities, do you hate lifetime income? I'm going to say no, they don't. There's an agenda behind that pitch. It's a very good one to get business for whatever agenda they're on, but they know better. They know that people love their Social Security payments and they love their pension payments. You're going to love your income rider payment and you're going to love your annuitization payment. Why? Because you can never outlive it. And if you set it up joint with a spouse or partner, then they can never outlive it. And the majority of us out there that's really worked hard for the money, I'm assuming you have. Heck, you're watching this video to find out how these things work so you can make a good decision. You worked hard for your money. You need to understand how these lifetime guarantees work. That's the reason you're here, but there's no perfect answer. They both work well. They just have their limitations and unique benefits. All right, I hope I solved answered some questions, solved some problems for you, and you got a better understanding. I do encourage you, I've gone deeper in this. By the way, I release videos every single workday forever. So they're always coming out, they're informational, they're educational. I did a video, this one here, on the best variable annuity income riders. Now, I didn't just limit it to variable annuity income riders. I went deeper and I did the index side too, which leads me to why you need to get the book, because the book, it goes even deeper and you can get that for free. In fact, you can get all my owner's manuals for free. And let me tell you how to do that in just a second. But first of all, what I'd like for you to do is click the subscribe button. These are going to be informative videos. You're going to learn a lot and you're going to find out how these products can work and complement your portfolio. To get the books, you're going to see Stan The Annuity Man description down there and the word show more. Click the word show more. You'll see a drop down, and then underneath there, you'll see how to get the owner's manual. I'll send them all to you. I've written 6 of them on all different product types. No obligation, no cost. We just want you educated. So if you decide to move forward and get a quote and talk to us, you're going to understand what you're going to buy. Remember, there's never urgency to buy an annuity. There's an urgency for you to understand annuities on your time and on your time frame. And from that, thank you for watching. See you next time.